Hello and welcome to the Global Asset Monitor Asia. My name's Jason Gerlis and I run the corporate business here at Ocorian. Our role in asset management is supporting funds, family offices, and high net worth individuals who are looking to raise or deploy capital across the world. And as such, our clients are having to deal with an ever evolving landscape. The Asset Monitor is our attempt to support our clients and the market with information about some of the emerging trends that we are seeing across the world, and in this instance, in Asia specifically. I'm lucky enough to be joined here today by two of my colleagues, Shawn, who runs our trust team here in Singapore, and Billie-Jo from our funds department, who runs the Boville Newgate business, which is our consulting arm. I'll be asking them some questions relating to the information that's presented in the study and getting their insights on what's happening here in Singapore and across the region. So my first question is to both Shawn and Billie-Jo. Asia, which is one of our fastest growing regions, is home to a whole range of different economies at various stages of development. So I'm interested to hear from you some of the different challenges and opportunities that you see in the region, in those different jurisdictions, and how financial centers like Hong Kong and Singapore are reacting and supporting to that development. Maybe Shawn, start with you.
Yeah, thanks, Jason. Asia is an interesting one because I think here in Asia, we see a good mix of different type of economies that our clients are from. On one hand, you have the very well-developed economies like Taiwan, Japan, South Korea. And on the other hand, you have the emerging economies, if I may, like Vietnam, Cambodia, for example. And where we see the challenges or the concerns of the private clients have, it very much mirrors where they are in the maturity of the private wealth journey. For example, in the well-developed economies, we have a lot of clients coming to us with concerns about business succession. When they're not around, who is ready to take over? Maybe they have different children, 3 children, for example. Not everyone is interested in business.
Sure.
What next? How do they then split their shares equally among 3 kids, for example? You have concerns also on that of family governance. How is their wealth? How is the family able to continue to administer their wealth in accordance to the family values that they wish to esteem? And there's also concerns involving the second generation in the overall wealth planning journey. On the other hand, you have that of the emerging economies, where concerns are typically around how comfortable is the patriarch relinquishing control over their structures or their wealth or their assets. And importantly, even in choosing their key partners, how ready are they to trust their partners? And there's still a lot of features of centralized decision making at the end of the day. So I guess where we really come in, a good fiduciary really will learn to appreciate the starting point of where the clients are at. Because I give you an example. Every client would say they want asset protection in some form or another. Almost nobody would say, asset protection is not important to me when I set up, say, a private client structure. But not every client is ready to approach asset protection the same way. For example, in the emerging economy, it's very common where they are concerned about still wanting to retain control. Then perhaps we could pivot the approach to say, how can I still achieve asset protection while still letting the patriarch still retain a lot of control over their business and their structure? So that is definitely some of the trends and challenges we see in Asia right now.
That's really interesting. I know that you work closely with your colleague Simona in Cayman, where the star trusts are attractive to Asian clients for just that reason. Excellent. And Billie-Jo, from a asset manager fund perspective, what are you seeing in the market?
So Singapore is a key fund hub, as is Hong Kong. I think it's fair to say there is a healthy rivalry between the two. I'm based here in Singapore, but have colleagues in Hong Kong who I work with very closely and have clients there. What we see in both jurisdictions is, managing assets on behalf of investors regionally and, of course, globally, also acting as a hub to deploy those assets throughout the region as well. So, many of our clients here in Singapore and in Hong Kong, use those jurisdictions as a base, but spend a lot of their time and efforts in our neighbouring countries as well. The MAS, the Monetary Authority of Singapore, has had a clear remit to grow the asset management sector over the last 10 or so years, and it's been very successful in doing that. AUM has grown significantly, and I think Singapore was previously known for private equity and venture capital, but now, is also, a key domicile for our hedge fund clients as well. So, the government is doing a great job of attracting global and regional managers to Singapore.
So your colleagues in Hong Kong, you see as your friends and not your enemies.
Absolutely, yes.
I spent last week in Hong Kong and learning the similarities and differences of the jurisdictions. All I can say is it's nice to be agnostic. So here at Ocorian, whatever the client needs, we're in the right place.
Absolutely. And many of our clients have a presence in both jurisdictions, so we help them across both. And of course are looking to build a presence in other APAC cities as well. But I think that, the hubs continue to be Hong Kong and Singapore, at least for now.
Yep. And our European and American clients appreciate having those financial centres where rule of law has been tested and they feel safe investing their money.
Absolutely.
Well, if I could add on as well about
Yes.
Hong Kong and Singapore, I mean, these are two key economies here in Asia. And the way I see it, it's not so much perhaps in competition, but how we really also complement each other in our offerings. I mean, Hong Kong has been and will continue to be really the key gateway to North Asia, which includes mainland China at the end of the day. And Hong Kong definitely is known for their deep capital markets. Whereas here in Singapore, I see it very much as maybe the launching pad into Southeast Asia, where I guess our strength in Singapore is perhaps like a political neutral safe zone, per se, where the private wealth, there's a lot of assurance that, structures here, we are not so, hopefully, affected by the geopolitical tension, so on and so forth. So I do see that Hong Kong and Singapore will still remain as key important players in Asia in the long run.
Thank you both. The next question for Billie-Jo. So I'm interested to understand how regulatory frameworks in the region are affecting private equity investing into debt structures, and what you're seeing in terms of the continuing evolution of that nascent field here in Asia.
Sure. So in the major economies here in Asia, so kind of China, Japan, and India, the traditional banks still dominate, and there are some strict regulations around non-bank lending, which has definitely constrained the growth of private debt holistically in the region. That being said, there are pockets of real activity and growth. So in Singapore, for example, we kind of anecdotally, as at Beauville Newgate, as at Ocorian, we've seen a steady stream of private debt or private credit managers looking to be licensed here, so wanting to manage funds. And the Monetary Authority of Singapore did kind of call out quite recently that asset class is growing here in Singapore. So we've rolled out the red carpet to private debt and private credit managers. I think in Hong Kong, we're perhaps seeing a little less of that. I mean, I don't have kind of the numbers at my fingertips, but certainly anecdotally talking to my colleagues in Hong Kong, they're perhaps seeing less of that flow. But that's not too surprising. Hong Kong is very much known for its hedge fund sector, private equity, private credit managers do tend to
Sure.
gravitate to Singapore, generally speaking.
We see a little bit of the same between Luxembourg and Ireland in the European sphere. But it's interesting, coming from the US, we're seeing private credit taking over from the banks in a lot of regards. So certainly feels like an area to watch here in Asia, as potentially it takes the lead from the world's largest capital market.
Absolutely. And the managers that we're working with at the moment, they're based here, but they tend to be involved in micro lending in our neighboring jurisdictions, such as Indonesia, for example,
Yeah.
or lending to SMEs. And, so we're definitely we're a long way behind the US, of course, but there's been a huge amount of growth. And I think the growth in private debt in the region in 2024 kind of surpassed the growth of the asset class globally, which I think is kind of an indication of
What's to come.
Of what's to come. Absolutely.
Thank you, Billie-Jo. And the next question is for Shawn. So given the growth that we're seeing in private equity and venture capital within the region, how are your high net worth clients positioning themselves to take advantage of that and invest their wealth into these not so alternative assets?
Thanks, Jason. It's very funny. It reminds me of an encounter that I had previously where I was structuring a SPV to do targeted investments for two different individuals. One of them was a fund manager where he did very well for himself, but he invested a lot in the listed equities market. The other gentleman was a private investor who made his wealth through venture cap investing, PE investing. So they both came together, and the whole plan was to set up a SPV where they can make targeted investments in the region. So the fund manager, halfway through the conversation, he said, I'm very excited to do this SPV because with my current track record I'm confident that I can bring 6 to 10% return annually for both of us. And then the private investor paused, and then he turned to the fund manager and said, wait a minute, I'm not interested in 6 to 10% return. I'm doing 200 to 300% return. But you're absolutely right. I mean, Asia went through a time where there was definitely a big growth in the private markets here. And I think about 5 to 10 years back, I think especially that of the tech boom here in this space, where there's a lot of wealth made from the technology sector in the private markets. I myself personally had the privilege of journeying with some of these clients where they started really their tech company really from scratch as a startup. And along the way, they did very well for themselves. And eventually they did exit as a private unicorn company. And a lot of this wealth that they managed to grow was then reinvested back into the private markets, also back in the tech space. It was very much
What they know, right?
Exactly, it's what they know. And it's very much like, I'm going to invest back into my friend's company, who is also doing a similar thing in the tech space, so on and so forth. But of course, that was a very different time. I mean, cost of borrowing was lower, valuations were skyrocketing. But all that really points to a growing need in the private wealth space for that of robust structuring when it comes to making targeted investments. And I think clients are not just asking what to invest, but they're also asking how to invest, how best to enter, what's the best SPV to choose to enter, a best jurisdiction. And I guess that's where Singapore dovetails very nicely into this whole picture here in Southeast Asia, because Singapore has many advantages to it that's going for itself. We have a wide network of DTAs. Last I checked, we have more than 100 DTAs, double taxation agreements. We have no capital gains tax, right? We are in a common law jurisdiction that allows the separation of legal and beneficial ownership, giving asset protection to our clients' structures. We also have a wide range of different types of legal entities that clients can choose from. Your private companies to your private trusts, private unit trusts, variable capital company, which I'm sure Billie-Jo has seen a lot as well. So that is really well-positioned Singapore as really a key launching platform here in Asia. And clients are also getting more astute. Beyond just selecting the right jurisdiction and the right SPV, making these targeted investments, they're also planning ahead. What's the ease of exit someday? Given the SPV that I choose, how easy is it to unwind from my main family structure to a third party, for example? And if you're going to leverage on DTAs for preferential income tax rate, how easy is it then to, say, obtain a certificate of residency from inland authorities to evidence that of the management and control here in Singapore and leverage on those DTAs. So it all really compels, at the end of the day, the fiduciary partners like us to really just up the ante, up our game in a way we advise and guide clients along.
It sounds like our clients are becoming more sophisticated.
For sure.
And as you say, how you invest your wealth will often be defined by how you made your wealth.
Yes.
So if we're seeing more clients, more ultra high net worth come out of the fund space, it's inevitable that they're going to expect the same level of support and structuring and guidance that they had in their professional lives when it comes to their personal wealth.
Yeah, exactly.
The lines blur. So on to the final question, and this is again directed at both of you. Given the impressive growth that we've seen in private asset classes here in Asia, what are the key opportunities and challenges that you think our clients will be facing looking to the future?
I think we are definitely at a fast evolving landscape right now. I mean, you talk about asset classes per se. We have new asset classes that clients are asking us about. Digital assets, for example, where, like it or not, at least 30%, 40% of our clients have really asked us about it, and whether we have a plan for it, whether we have a robust structure that we can propose to house their digital assets at the end of the day. And I say this is where one of those areas where perhaps the investor's appetite is far outpacing that of the fiduciary business, of how we are able to pivot to cater to that. But it also emphasizes then really all of us as professionals to really upskill, to really learn what is digital assets, what are the risks involved, what kind of structures could we put in place that could really box some of this risk, not just from a client's perspective, but from a fiduciary's perspective. And then there's also, as clients get more astute, there's also concerns about, it's not just any investments that they wish to make, but how are some of the select investments, how do they very nicely align with the family values that they choose? I've increasing clients telling us that, when I'm not around, can you please put it in my letter of wishes within my trust structure that no investment should be made, maybe in, for example, in the tobacco industry.
Yep.
Yeah,
Sure.
that, I wish that my children have full reign to decide. Just these are the no-go parameters that they cannot touch. So all these are some of the future trends I see in the region.
It's interesting. Coming from the US, I've been struck by how many people are still smoking here in Singapore and Hong Kong, but I suppose there is still a trend. But no, it's interesting what you say. And we see a lot of demand in the British Virgin Islands for fiduciary structures relating to digital assets. That, as you say, it's an evolving landscape. And our role is to keep clients safe.
Yeah.
So they might have aspirations to invest in a new asset class. And what we need to do is make sure that from a corporate structuring perspective, we have the right solutions which are in lockstep with the regulations.
That's a good one, because if I'm not wrong, Singapore is our regulator here is very forthcoming and embracing of digital assets, right? And then
That's
space here.
Yeah. I think that it is embracing of digital assets, but still in a very measured way. And very protective, particularly of retail investors. But yes, reputable players in the digital asset space are welcome here, for sure. I agree. I agree with that. And I think I echo what Shawn said with respect to funds. We are fully anticipating, a growth in AUM, the number of managers, the number of funds, and of course that creates great opportunity for the funds ecosystem, which we need to respond to. We need to keep up with changes in the industry. We need to ensure that we have the appropriate talent on the ground here in Singapore and elsewhere in the region. And governments and regulators need to continue to be innovative in terms of new fund structures, adapting fund structures to attract those players. We've seen a lot of private equity and private debt managers, the big global managers, invest in the region in terms of new people, new offices, funds being managed here. So we need, as service providers, to keep pace with what is going on and the development, so that we can welcome those new players to the region and ensure that they can manage funds successfully and not be impeded by difficult regulations, inflexible fund structures, difficulties with exits from funds in the event of liquidity crunches and that kind of thing.
So it sounds like all the opportunities of growth in the region come with their own challenges.
Absolutely.
The nice thing about being in a growing region is, as long as we position ourselves, that's what our clients need.
Yes.
Excellent. Well, thank you, Shawn, and thank you, Billie-Jo. I think that's all we've got time for, but really appreciate you sharing of your knowledge and insights. That's all we have time for today. Thank you for joining us. There will be future editions of the Global Asset Monitor that are released for Asia and the rest of the world. At Ocorian, our 4 service lines, corporate, capital markets, funds, and private clients, are always focused on what's happening in the market so that we can help our clients expand and grow safely and compliantly. So we'll be looking at the data and sharing what we find with you. Thank you.